Hey guys, welcome back. I thought I would give you a glimpse into all of the holdings of my portfolio. I don't do this very often, but I think it is helpful at the end of the year to actually look at all of the holdings in the portfolio. So maybe this gives you some ideas of stocks that you can add to your due diligence process. And also, you get a chance to see how those stocks have contributed to the success of the portfolio. Now, this is a bit of an addendum to my last video. So at the end of this video, I'm going to put a link to the previous video that I did that talks about the performance of the portfolio. I think that's also important to see. But this video is strictly about the contents and the holdings in the portfolio. I think you're going to enjoy this. So let's get started. Now, I keep my portfolio in several different apps. They give me different pieces of information. I'm going to be showing you the portfolio out of Simply Safe Dividends. I think it's a cleaner look. I think you'll get a lot more out of it by using that particular app. So let's get started. You can see that the portfolio value is now $1,375,801. The annual income, a lot of people call this PADI, which is projected annual dividend income, is $38,268. The portfolio yield is around 2.8%, but my yield on cost is 3.25%. So that means that there's a lot of gains in the portfolio. But another important piece of information is that the dividend growth of the last 5 years for my portfolio overall is 7.4%. So let's move on into the holdings. You'll see that there are 35 holdings in the portfolio. I'm going to sort these in descending order so that you can see what is, I guess, heaviest in my portfolio. And one of the things that I do is I invest 30% of the portfolio into an ETF called VOO, or the Vanguard S&P 500 ETF. Now, I did this earlier this year, and you'll see that the gain so far is 17.1%. The highest individual holding that I have is Microsoft. Microsoft is 4.2% of the portfolio. It is at a 32.5% gain. You'll see that my cost per share on that's around $283. Current market price is around $376. Now, one of the two stocks that I really regret buying when I did was Stanley Black & Decker. Stanley Black & Decker is 4.2% of the portfolio. You'd see that I've got a 15.1% loss on Stanley Black & Decker. My average cost is around $115, while the current price is around $98. Now, Johnson & Johnson is 3.9% of the portfolio. I'm down 0.9% on Johnson & Johnson. Not too worried about that. Johnson & Johnson is a consistent performer, so I'm confident that over time that will correct itself. Now, next on the list at 3.6% of the portfolio is T. Rowe Price. T. Rowe Price, I'm pretty much break even on that. The current price is 107.69. My cost is around 107.13. So that's pretty much a break even, and I'm happy with that at this point. Now, Texas Instruments is 3.3% of the portfolio. I'm up 5% on that. Moving then into my highest yield stock, it is Altria Group, ticker symbol MO. It's 2.9% of the portfolio. I'm down 8.7% on Altria Group. Now, the second stock that I'm just not really happy with is Whirlpool. I continue to hold Whirlpool. I have 2.9% of the portfolio in Whirlpool. The gain on that, or actually the loss on that, is 33.9%. That's a pretty significant decline. My average cost is around 184. It's trading around 121. Now, I'm going to continue to hold Whirlpool. I do think that they can turn this around. It's going to be a long-term play, though, for me. If it does drop, I think it got down around 110 or so earlier this year. I had other things that I wanted to do with cash, so I didn't have any money to average down. But if it were to go pretty low, again, I would average that down some more. But for now, I'm just holding. and wanting their business model to actually catch up with where the stock price is. Now, Cummins is 2.7% of the portfolio. Now, those of you who have followed me for some time will remember that CMI, which is Cummins, is used to be one of the larger holdings in the portfolio. Based on some information I'm looking at, I decided to trim that to what I would call a normal weight in the portfolio. So instead of it being around 4.5 to 5% of the portfolio, it's now down around 2.5% of the portfolio. IBM is 2.7% of the portfolio, and also I did trim IBM. I don't know, a month or two ago, and the reason that I trimmed IBM is because it is one of those stocks that had gotten into pretty overvalued territory. It's like 25 to 30% overvalued. So I went ahead and trimmed some of those shares back, got it down to what I consider a normal level, a normal weighted level in the portfolio. So IBM's at 2.7%. Now, Parker Hannifin is 2.5% of the portfolio. I have actually been chasing Parker Hannifin higher, and you can see that my cost per share is around $322. I've got about 75 shares. I'm still at a 43% gain on those shares. It is 2.5% of the portfolio. I wish it was more, but I'm going to wait and see where that goes, because it is currently at $460 a share. I'm going to see if that won't come back a bit before considering adding more Parker Hannifin to the portfolio. I also have 2.5% of Air Products, ticker symbol APD. There's about a 7.5% gain on those shares. I added some more a couple of months back when it was down in the mid 250s. It's now back up into the mid 270s. So I'm going to hold at this point and not add any more APD unless it drops again. Lockheed Martin is about 2.4%. It is also one that I trimmed back this year. I trimmed it back because with all of the unrest, the geopolitical unrest out there, there is no better climate for Lockheed Martin. And so therefore, I believe it is no better price for Lockheed Martin than what we're seeing right now. I'm not getting rid of Lockheed Martin, but I did make it a more normal weight in the portfolio. If it drops back down later, I may pick up some more shares. But for now, I'm keeping it at a normal weight. Also at 2.4% of the portfolio is U.S. Bancorp. Now, I started adding U.S. Bancorp this year, later in the year actually, and it's at almost a 30% gain in the portfolio. So, but right now it's at 43. I'm not adding any more at this point in the portfolio, but if it were to drop back into the mid 30s, I would be all over it again. SOX is a iShares semiconductor ETF. I started buying this a couple of years ago, I guess, and it is 2.2% of the portfolio. So I'm up about 27% on it. I have also chased this upward. So that's why the average gain or loss is less, is because I've been buying shares I started buying a couple of years ago, but then added shares as it went up in value. Now, Pinnacle West, PNW, this is one that I'm considering adding more shares to. My holdings are at about a 2% gain. It is one of my favorite utilities in the portfolio. EOG Resources, it is 2% of the portfolio. I'm at a 60% gain on EOG Resources. And the cool thing about EOG Resources is that they have a relatively small quarterly dividend, but they have been paying these huge special dividends. And I have been just kind of raking those in as we went. I think at one time I calculated that the yield on EOG was over 10% because of the special dividends. So I'm really happy with that. Not only am I up 60%, I've also been getting about a 10% yield off of those shares. It's been a really good investment for me. General Dynamics, I've got 2% of that in the portfolio. It's up about 40%. Now, DGRO, I mentioned this in my previous video. This is an iShares Core Dividend Growth ETF, and I just started buying this. I have bought this as a proxy when I have cash that I don't really have a place to put it in an individual stock. So rather than putting it in, the S&P 500 or SCHD, I'm putting it into DGRO because I really like what I see in DGRO. It's pretty similar to my investing style. So rather than trying to force some cash into shares that I may not want to buy at the moment, I'm putting it into DGRO. That's currently 2% of the portfolio. Prudential is 1.9%. I have it because of its yield. You can see the yield on cost here is about 5.5%. It's up 14.7% in the portfolio. Atmos Energy, I've been really pleased with it. It is 32% higher than when I bought it. Just seems to be a very well-run gas utility out of Texas. Now, Hess Midstream, this is one that I really like. It really has the features of an MLP, a master limited partnership, but it is structured so that it is more like a dividend paying stock. So that's what I like about it. I get a 1099 just like all the rest of my stocks. It is qualified in its dividends. So I like it for that reason. I also like it because it's been raising its dividend every quarter, I think, for quite some number of years now. So I'm really happy with it. It's up 22% of the portfolio. And again, my yield on cost for that is 9.5%. So it is a nice part of my income strategy in my portfolio. Now, Triple G is Graco. I just added that this year. It's up 15%. I'm holding off adding any more of that. It is 1.3% of the portfolio. If it drops back down, I will pick up some more shares. RTX is on my list to add some more shares sooner rather than later, but I'm up 8.6% on the shares that I have. But again, it's only 1.2% of the portfolio. Kilroy Realty, I have trimmed some of the shares that I had there. It's only 1.2% of the portfolio now, but I've got about a 43% gain on those shares. And as everybody's aware, I bought some Hershey shares. It's 1% of the portfolio, and I'm up 1.7% overall on the Hershey shares that I bought. Lowe's is 1%. It is up 27% from where I bought it. WEC, which is a utility out of Wisconsin, is up 2% from where I bought it. Now, Medtronic is a company that I'm probably going to add more shares to. It's only 0.9% of the portfolio. It's up 4%. FNF, which is Fidelity National Financial, is up 32%. This is one that I may look to remove from the portfolio just from a valuation perspective. Digital Realty Trust is only 0.6%. It's up 35% in the portfolio. Main Street Capital, I'll just kind of walk through the rest of these. You can see the numbers on the screen here. Main Street Capital, Realty Income, Raymond James, and CME Group are all very small parts of the portfolio. And they are, Realty Income is the only one I'm losing money on at the moment. And you can see here that I have cash in the portfolio of $50,573. So that's a look at all of the items in my portfolio. So if you're interested in the stocks that I'm looking to add to the portfolio sooner rather than later, there's really four I'm looking at. It's probably no surprise to many of you. The first one is RTX. I think they're at a pretty decent valuation, and I do plan to add some more of those soon. Hershey's, which is, a video that I did a couple of videos ago. Medtronic is really undervalued, and that's one that I'm considering adding more shares. And then lastly is Pinnacle West Capital Corporation, which is a utility out of Arizona and probably one of my favorite utilities. So for what it's worth, those are the four stocks that I'm considering adding as 2024 now becomes reality for our portfolios. So if this is the kind of content that you guys are interested in, consider subscribing to the channel. I'd love to have you along for the journey. And with that, I will see you on the next video.